You kind of answered my next question, but I do want to dig into Stretch a little bit. Describe kind of this end game. Is it, I mean, building a better bank, you mentioned, is that sort of where you see strategy heading? And right now, I mean, this product exists. People can put their money in it. It's a phenomenal asset to the market. But is it just a matter of educating the public that this exists, or like, how do we continue to evolve?
Yeah, well, I think the end game is we accumulate $1 trillion worth of Bitcoin and then we grow it 20, 30, Bitcoin appreciates 21% a year in 21 years. And then we grow that capital by issuing more credit. So we're growing faster than 21%. So the end game is get to $1 trillion of collateral growing 30% a year, be issuing $100 billion of credit a year, growing 20, 30% a year. And that credit is yielding 200, 300, 400 basis points more than all of the real estate backed credit, the corporate backed credit, the fiat backed credit, or any other type of credit instrument in the world, right? And what's going on there then is you reinvigorate the credit markets instead of people having a credit, they're sick in Switzerland, right? Instead of getting zero in Switzerland, if someone is issuing, if half the credit in Switzerland is digital, then the zero goes to 200 or 300 basis points. And because it goes to 300 basis points, maybe the risk-free rate goes up and financial repression becomes less common and more difficult, right? You're actually improving the traditional credit markets and you're offering Bitcoin believers something 3% better. Same thing in yen, right? Eventually, instead of trillions of dollars yielding 50 basis points, the average blended yield will go to 300 basis points or 400 basis points, and you return health, and integrity to the credit markets everywhere in the world. And it's done by some combination of Bitcoin treasury companies working in concert with each other, right? The Bitcoin network becomes a multi-$100 trillion network. The amount of digital credit, 10 trillion, 20 trillion, 100 trillion, right? What if there's $100 trillion of digital credit and hundreds, by the way, 100 trillion in digital credit backed by 200 trillion worth of digital capital would be not fractional banking, right? You haven't got to 1-to-1, you're still 2x over collateralized, which would be better than the very best AAA corporate investment grade debt in the United States is like 2.5 times or 2.5 times over collateralized. Yeah. So it's all AAA investment grade, but with more yield and more transparency. So I see the end game as the credit markets are reinvigorated and digitally transformed to be backed by Bitcoin, digital gold, digital capital. And I see the equity markets are reinvigorated because the equity indexes all start to hold these companies, right? We creep into the equity indexes. Metaplanet gets into the equity indexes. And then pretty soon, all these companies in the S&P 500, they all have Bitcoin. And if all these companies have Bitcoin, then the S&P index is substantially got a component of Bitcoin, and Bitcoin's going up 21% a year, right? So companies get healthier, credit gets less risky, yields, your savings account doesn't give you 0% in Switzerland or half a percent in Japan or 2% in Europe or 1%. It gives you 6, 7, 8, 10, right? So I think I think the 20th century banking networks get transformed. The 20th century credit networks get transformed. The 20th century equity capital markets get transformed. Bitcoin becomes the foundation of the 21st century digital credit, digital equity, digital banking, digital capital, digital economy. And Bitcoin treasury companies are the engines, the drivers, the dynamos powering up network. And, you know, the experimentation is extraordinary. There's a Cambrian explosion of ideas. You know, the way you do it in South America is different than the way you do it in North America. And at some point, Bitcoin will find its way on the balance sheet of insurance companies, and it'll find its way on the balance sheet of actual banks and tech companies. And, you know, and if you start to reimagine insurance, you know, powered by Bitcoin, it's a different world,
Right.
better insurance. And reimagining bank accounts powered by Bitcoin. What happens when your bank offers you a money market that's not fiat powered? Because the fiat powered money market would pay you 420 basis points right now, but a Bitcoin powered money market would pay you 10.2%, 1,020 basis points right now. So as banking gets reinvigorated and as insurance gets invigorated, and when the Apples and the Googles are, you know, custodying and offering Bitcoin via all their rails, then you've got a digital transformation it's an invigoration, and we start to reach a digital economy which is smarter, faster, stronger, 10x better, 10x more productive, maybe 100x more productive. And the people that are in that economy win. And the people that are blocked from that economy look like the North Koreans where their lights go out at night. You know, they get locked off the power grid. And hopefully, it'll be such a compelling future that no one will want to be locked off the grid. Your choice is to be smart and fast and strong and rich, or you could be stupid and slow
and broke,
and weak and poor.
So do you anticipate in that sort of future strategy being in a position where you might extend Bitcoin credit to institutions, distressed institutions or sovereigns some point in the future?
Yeah, well, when we sell credit, we don't buy it. Okay, so when you say extend credit, we won't be making a loan to them. We will be offering them our credit instrument. So if you're a nation state and you want 10% yield, you'll buy our credit instead of buying something that yields 3%, right? We will sell the credit, create the credit, right? And I think our view is we want to create, not 10 billion, but 100 billion and then $1 trillion. And then trillions of dollars worth of credit backed by digital capital.